Good day Forex trader. The pair will likely resume the bullish trend as investors attempt to buy the dips. Bullish view. Buy the EURUSD and add a take profit at 1.1465, 38.2% retracement. Add a stop loss at 1.1170. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1200 and a take profit at 1.1100. Add a stop loss at 1.1300. The EURUSD pair was little changed as concerns about the new Omicron variant of COVID eased. The pair also reacted mildly to the relatively strong US pending home sales numbers and Germany flash inflation data. It is trading at 1.1265, which is slightly below Friday's high of 1.1345. Eurozone inflation data. The EURUSD pair wavered even after data from Europe showed that the bloc's inflation was soaring. On Monday, data by Germany showed that the country's headline consumer price index, CPI, rose to 6% in November. This was the highest level in more than a decade. It was also higher than the median estimate of 5%. Still, on a monthly basis, consumer prices actually dropped by 0.1%. Other countries in Europe are seeing higher prices. On Monday, data from Spain showed that the headline CPI rose from 5.4% to 5.6%. Preliminary data from France and Italy have shown that prices are soaring. Therefore, the pair will today react to the latest preliminary inflation numbers from the Eurozone. Economists polled by Reuters expect the data to show that the headline CPI rose from 4.1% in October to 4.5% in November. Still, analysts believe that the European Central Bank, ECB, will maintain a dovish tone in the coming meetings. The bank believes that the current pace of inflation is transitory and that prices will start to normalize in the coming years. The next key catalyst for the EURUSD will be U.S. consumer confidence and housing data. The Conference Board will publish the latest consumer confidence data. Economists expect the data to show that confidence fell from 113.8 in October to 110.9 in November as inflation concerns remain. The U.S. will also publish the house price index data. On Monday, data showed that pending home sales rebounded by 7% in October. EURUSD forecast. The EURUSD pair tilted lower in the American and Asian sessions as the fear of the Omicron virus eased. The pair is trading at 1.1260, which is slightly below the 23.6% Fibonacci retracement level. It is also between the middle and upper lines of the Bollinger Bands. It has also moved slightly below the standard pivot point. Therefore, the pair will likely resume the bullish trend as investors attempt to buy the dips. If this happens, the next key level to watch is the 38.2% retracement level at 1.1465. GBPJPY pair's intraday losses to 8-week low remains depressed below 151.00. GBPJPY witnessed fresh selling on Tuesday and dropped to the lowest level since October 4. The risk-off impulse underpinned the safe haven JPY and exerted heavy pressure on the cross. Weaker USD benefited the GBP and helped limit losses. Brexit woes still favor bearish traders. The GBP/JPY cross trimmed a part of its intraday losses to the lowest level since October 4 and was last seen trading around the 150.80 to 85 region, still down 0.2% for the day. The cross struggled to capitalize on its modest intraday gains, instead met with a fresh supply near the 151.60 to 65 area amid the emergence of fresh buying around the safe haven Japanese yen. Investors now seem worried about the potential economic fallout from the spread of a new vaccine-resistant variant of the coronavirus. This, in turn, triggered a fresh wave of the global risk aversion trade, which was evident from a sell-off in the equity markets. The already weaker market sentiment deteriorated further after Moderna's chief executive Stefan Bancel predicted that existing vaccines will be much less effective at tackling Omicron than earlier strains of COVID-19. This, in turn, boosted demand for traditional safe haven assets and dragged the GBPJPY cross to an intraday low level of 150.42. However, a modest pickup in demand for the British pound helped limit any further losses. The sterling drew some support from the heavily offered tone surrounding the US dollar, which was weighed down by a steep decline in the US Treasury bond yields. However, the UK-EU impasse over the Northern Ireland Protocol, along with the worsening row over the post-Brexit fishing rights between France and Britain, acted as a headwind for the GBP. This, in turn, kept a lid on any meaningful recovery for the GBP-JPY cross. Meanwhile, the pair's inability to gain traction favors bearish traders and supports prospects for an extension of the recent pullback from over 5-year high touched in October. Hence, any recovery back above the 151.00 mark might be seen as a selling opportunity and runs the risk of fizzling out rather quickly. In the absence of relevant market-moving economic releases, the GBP-JPY cross remains at the mercy of developments surrounding the coronavirus saga. GBPUSD climbs to multi-day top, around 1.3365 to 70 region. The heavily offered tone surrounding the USD pushed GBPUSD back above mid 1.3300s. A steep fall in the US bond yields turned out to be a key factor that weighed on the USD. Brexit-related uncertainties could act as a headwind for the British pound and cap gains. The GBP-USD pair caught fresh bids during the early European session and shot to the 1.3365 to 70 area, or a near one-week high in the last hour. Following a brief consolidation through the first half of the trading action on Tuesday, the GBP-USD pair regained positive traction and is now looking to build on its recent bounce from a YTD low. The uptick was exclusively sponsored by the heavily offered tone surrounding the US dollar, weighed down by a steep decline in the US Treasury bond yields. The detection of a new and possibly vaccine-resistant coronavirus variant, Omicron, seemed to have dashed market expectations for an early policy tightening by the Fed. This, along with the global flight to safety, dragged the yield in the benchmark 10-year US government bond to a 3-week low, around the 1.45% threshold, and undermined the greenback. Meanwhile, worries about the potential economic fallout from the spread of the new coronavirus variant took its toll on the global risk sentiment. This was evident from a sell-off in the equity markets, though did little to provide any respite to the safe haven USD. That said, persistent Brexit-related uncertainties might cap gains for the GBP-USD pair. The UK-EU impasse over the Northern Ireland Protocol, along with the worsening row over the post-Brexit fishing rights between France and Britain, could act as a headwind for the British pound. This, in turn, warrants some caution for aggressive bullish traders, and before confirming that the GBP-USD pair has formed a near-term bottom near the 1.3280 to 75 region. There isn't any major market-moving economic data due for release from the UK, while the U.S. economic docket features Chicago PMI and the Conference Board's Consumer Confidence Index. The key focus, however, will be on Fed Chair Jerome Powell's testimony before the Senate Banking Committee, which could influence the USD and provide some impetus to the GBP-USD pair. AUDUSD Forex signal, extremely bearish below 0.7115. The pair will likely continue the bearish trend as the market attempts to test the S1 at 0.7065. Bearish view. Sell the AUDUSD and add a take profit at 0.7065. Add a stop loss at 0.7250. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7200 and a take profit at 0.7300. Add a stop loss at 0.7100. The AUD-USD pair was little changed in the Asian session as the market reflected on the latest Australian and China data. The pair is trading at 0.7150, which is slightly above this month's low of 0.7115. Australia and China economic data. The AUD-USD pair was little changed on Tuesday after the latest numbers from China and Australia. In China, data by the National Bureau of Statistics showed that the country's manufacturing PMI rose from 49.2 in October to 50.1 in November. This was the first time in a few months that the figure has risen. It also means that the sector is doing relatively well even as challenges remain. Additional data showed that the non-manufacturing PMI declined slightly from 52.4 to 52.3. Subsequently, the composite PMI rose from 50.8 to 52.2, signaling that the country's economy was doing relatively well. Chinese numbers are usually important for the Australian economy because of the volume of goods that China buys from Australia. The AUDUSD also reacted to data from Australia. The numbers revealed that the country's private sector credit rose by 0.5% while building approvals declined sharply in October. This signals that home prices will likely remain high as inventories lag. Economic numbers from the US and the overall decline of volatility also played a role in the country's price action. In a statement, Joe Biden urged Americans to carry on as normal even as the Omicron variant spreads. He insisted that all Americans should get the vaccine. Later today, the pair will react to the latest U.S. consumer confidence data by Conference Board. The numbers are expected to show that U.S. consumer confidence declined to 110.9 in November as inflation concerns remain. AUDUSD forecast. The AUDUSD pair is trading at 0.7154. On the 4-hour chart, this price is slightly below the important support at 0.7170, which was the lowest level on September 30th. It is attempting to do a break and retest pattern. The price is also at the middle of the Bollinger Bands and the standard pivot point. It has also moved slightly below the 25-day and 50-day moving averages. Therefore, the pair will likely continue the bearish trend as the market attempts to test the S1 at 0.7065. This view will be invalidated if the price rises above the key resistance at 0.7200.